Today, volatility rules. The DFA daily to the 6th of March 2021. Hello again, it's Martin North from Digital Finance Analytics, where I've noticed posts covering finance and prop news with a distinctively Australian flavour. This is just a quick market update because things keep moving around. Wall Street surged in volatile trading on Friday, with the Nasdaq rebounding at the end of a week that saw it extend losses to about 10% from its previous record high. But all three of the main indices in the US bounced back from losses earlier in the day, with investors in recent sessions spooked by rising interest rates that offset any optimism about an economic rebound. The Dow Jones was up 1.85% to 31,497. The S&P 100 was up 1.75% to 1,743. And the S&P 500 was up 1.95% to 3,841. The financials index in the US was down 1.21% to 548.17. And the Nasdaq was up 1.55% to 12,920. The US Volatility Index was down 13.69% to 2466. Amongst the banks, Goldman Sachs was down 0.58% to 327.37. Google was up 3.1% to 2,097. Amazon was up 0.77% to 3,000. And Apple was up 1.07% to 121.42. Facebook was up 2.58% to 264.28. And Boeing was down 0.66% to 223.22, while GE was up 0.29% to 1360. And Intel was up 4.13% to 60.74. And GameStop was up 4.07% to 137.74. Microsoft rallied 2.2%, boosting the S&P 500 more than any other stock. The benchmark 10-year US Treasury yield hit a new one-year high of 1.626, after non-farm payrolls increased by 379,000 jobs last month, blowing past a rise of 182,000, which was forecast by most economists. The US 30-year bond was up 0.92% to 2.309. The 10-year bond was up 1.45% to 1.577. And the 3-month was up 6.84% to 0.041. The dollar index was up 0.39% to 91.98. There was also a focus on the $1.9 trillion US dollar coronavirus aid bill, as a sharply divided US Senate began what was expected to be a long debate over a slew of amendments to how the money should be spent, and the lift in the basic wage rate might be one of the casualties. The Nasdaq was headed for its third straight weekly decline after a recent spike in Treasury yields dented demand for the high-flying technology stocks. Rising interest rates, of course, disproportionately hurt high-growth tech companies because investors value them based on earnings expected years into the future, and high interest rates hurt the value of future earnings more than the value of earnings made in the short term. And so the tech-heavy Nasdaq was about 9% below its February 12th closing high, and this week it lost about 3%. Now, Jake Dollarhide, Chief Executive Officer of Longbow Asset Management, said his firm in recent days had bought shares in a handful of growth companies whose prices had been pummeled in the recent sell-off. Next week, he said, I would expect volatility to continue with pockets of opportunity, with certain things that sold off, potentially rebounding. And over in the UK, the FTSE was down 0.31% to 6,630, while the financial services index was down 3.95% to 795. Royal Bank of Scotland was up 0.8% to 188.05, and Metro Bank was down 2.49% to 125.25. The pound US dollar was down 0.37% to 1.3843. In Germany, the DAX was down 0.97% to 13,920, while the 10-year bond was down 2.15% to minus 0.304. And the German 30-year bond was up 1.24% to 0.206. Deutsche Bank was up 2.23% to 10.65. And the euro US dollar was down 0.4% to 1.918. And the Italian 2-year bond was down 3.22% to minus 0.373. And earlier, Asia-Pacific stocks were down, continuing Thursday's losses after US Treasury yields moved to increase investor jitters. The ASX 200 closed down 0.74% at 6,710. The ASX 200 financials was up 0.09% to 6,087. The real estate trusts were down 0.82% to 1,376. And the local volatility index was up 1.91% to 1661. The S&P ASX 200 futures was up 0.98% to 6,799. Amongst the banks, ANZ was up 1.59% to 28.84. CBA was up 0.08% to 86.45. NAB was up 0.3% to 26.39. Westpac was up 0.12% to 24.87. Amongst the regionals, Bank of Queensland was up 1.01% to 9.06. Bendigo and Adelaide Bank was at 10.25, and Suncorp was down 1.17% to 10.11. Macquarie Group was down 1.52% to 144.20. AMP was down 0.35% to 1.41, and Genworth was at 2.39. McGrath was down 0.81% to 0.61. Yellow Brick Road was up 2.2% to 9.3 cents. AFG was down 2.25% to 2.61. And Mortgage Choice was up 0.87% to 1.16. Afterpay was down 2.47% to 115.40. And CIMAC was down 3.08% to 18.90. The Aussie US dollar was down 0.49% to 76.87. And the Euro Aussie dollar was up 0.12% to 1.55. The Aussie 2-year bond was down 13.12% to 0.123. The RBA-controlled 3-year bond rate was down 12.07% to 0.128. And the 10-year was down 3.05% to 1.780. The Aussie Gold Cross was up 0.77% to 2,213. And the Bitcoin Aussie Cross was up 1.6% to 63,766. And over in Japan, the Nikkei index slid as the Prime Minister said the current state of emergency in the Tokyo region would be extended. The Nikkei was down 0.23% to 28,864. The The Shanghai was down 0.04% to 3,501. And the US yuan was up 0.42% to 6.496. China's National People's Congress opened on Friday, where a conservative economic growth forecast of about 6%, which was below economists' forecasts, was set for 2021. And the Congress also outlined fiscal support to support China's economic recovery from COVID-19. Beijing also placed reforms in Hong Kong's electoral system on the agenda for its annual two sessions meeting. The reforms could lead to Hong Kong's Legislative Council elections being delayed for another year to September 2022 and place the curbs on democracy activists being elected. And reportedly, they've now set to review a draft resolution proposing the reforms in coming days. Gold futures were down 0.16% to 1,698. Silver was down 0.71% to 25.28. And copper was up 3.1% to 4.10. While crude oil was up 3.81% to 66.26. The Stoxx 600 was down 0.81% to 408.54. The Russell 2000 ETF was up 2.08% to 217.63. And the S&P 500 futures was up 1.99% to 3,840. The Nasdaq futures was up 1.59% to 12,653. Some investors expressed concerns about rising inflation and the impact of higher yields on elevated stock valuations, even as others view the rate moves as a positive sign of economic recovery. The US dollar has gained 0.8%, and there you will see the holy trinity of market fears: rising real rates, increased expectations of rate hikes, and a stronger US dollar, Pepperstone Markets Limited head of research Chris Weston said to Reuters. It makes logical and intuitive sense that Treasury yields should move back up to 1.5% or 2%, but we're concerned with the rest of the market about the speed at which it's getting there, said Allianz Global Investors strategist Mona Mijan. And meanwhile in crypto land, Ethereum was up 0.12% to 1,532, and Bitcoin was up 1.16% to 48,862. And meanwhile, John Hawkins, a senior lecturer at the Canberra School of Economics, in The Conversation, wrote an interesting piece saying, "Bitcoin, this year I stand to make $200 million more than Elon Musk." Elon Musk, the chief executive at Tesla, recently announced his company had bought $1.5 billion of Bitcoin. The announcement led to a flurry of enthusiasm and a quick surge in price for the controversial cryptocurrency. The price bump has had good news for Musk in the short term. At one point, Tesla's Bitcoin investment gained more than $1 billion in value. But can that enthusiasm be sustained, he asks? I think there is a good chance that over the next year, the price of Bitcoin will drop back towards its fundamental value, which is nothing. If Bitcoin were to lose half its present value, which is not unlikely, he said, given its extremely volatile past behaviour, Tesla will lose around $1 billion. As Musk owns about a fifth of Tesla, then he'd be down $200 million. In contrast, he says, I own no Bitcoin, so I'll lose nothing, which means I will have done $200 million better than Musk. Musk is not doing Tesla shareholders any favour, he says. If they wanted to be exposed to the rise and fall of Bitcoin, they should just buy some themselves. Now they have no choice. If they want to invest in Tesla electric vehicles, they're also vulnerable to the vagaries of Bitcoin. The usual justification for making investments more diverse is that it can reduce risk, but buying the extremely volatile Bitcoin will make Tesla's earnings even more uncertain. Nor is Musk doing his fans any favours. As a rock star CEO with more than 40 million followers on Twitter, his musings are widely reported in other media. By publicly endorsing Bitcoin, Musk may lead some of his fans to invest in this highly risky speculative asset. They may not be as well placed as the multi-billionaire to absorb any losses in their investment. Although, to be fair, Musk has warned them not to invest their life savings. Nor is he doing the inhabitants of this planet any favours. The generation of bitcoins known as mining uses vast amounts of energy to power specialised computers solving complex but useless mathematical problems. Estimates vary as to how much energy they waste. Some studies suggest Bitcoin production uses more electricity than the whole of Argentina, Poland, Norway or Switzerland, but even the lower estimates are that it results in more carbon emissions than Estonia. And if Bitcoin became more popular, this would only increase. So the question is, how likely is it that Bitcoin could lose half its value within a year? Well, it has form. After it peaked at 24,000 Aussie dollars in December 2017, it dropped to 10,000 Aussie dollars by February 2018, and after recovering to 16,000 Aussie dollars in July 2019, it dropped to 8,000 Aussie dollars by March 2020. Bitcoin may be the purest ever example, he says, of a speculative bubble. It follows in the footsteps of famous bubbles such as the South Sea bubble, the Dutch tulip mania, gold around 1980, the dot-com boom of the 2000s, and the US housing market before the global financial crisis of 2008. But past bubbles have had more going for them. Houses provide shelter, gold has industrial use, and jewellery can be made from it. The South Sea Company and millennial tech stocks at least promise streams of future dividends. Even tulips can be admired for their beauty, but Bitcoin offers no return at all unless you can sell it to a greater fool. It is a Seinfeld asset, a speculation based on nothing. Bitcoin's backers often say its value stems from the fact that its supply is limited. This is complicated by the fact dissident users have created forks in the past, leading to lots of different Bitcoins, such as Bitcoin Cash. But even if we accept the limit at face value, there is no limit on the creation of other cryptocurrencies. There are literally thousands of them already, such as Litecoin, Tether, and Dogecoin. In any case, just because something is of limited supply does not inherently mean it has value. Another argument for Bitcoin says it could be an alternative to traditional currency for making payments. The first purchase made with Bitcoin was more than a decade ago. 2 pizzas paid for with 10,000 Bitcoins. I hope the buyer enjoyed the pizzas because the coins would now be worth 500 million US dollars. Despite the hype, very few vendors accept Bitcoin and hardly anyone pays with it. A Sydney art gallery that accepts Bitcoin has never had anybody pay with it, while a bar that accepts it reports no customers using it for years. Even some crypto conferences refuse to accept Bitcoin, and you can buy an I accept Bitcoin t-shirt on Amazon, but you cannot pay for it using Bitcoin. This is unlikely to change material, he said. Tesla has hinted it may accept Bitcoin in future, but so far does not. There are inherent limits to the ability of Bitcoin to provide payment services. Bitcoin networks can only handle 10 transactions per second, compared with the 1,000 per second allowed for by Australia's fast settlement service. Transactions may be stuck in a queue for hours. If any electronic currency became a significant payment medium, it is likely to be a central bank digital currency, which would be legal tender and be able to be used for a very large number of transactions. Musk has plans to colonize Mars, he concludes, so maybe he will declare Bitcoin the legal tender there. But until then, it would be better for us all if he kept it off Tesla's balance sheet. Well, whatever you think about Bitcoin, I think there are some important points there about the uncertainty of investments. But more generally, given where we are around the markets, the rises of bond yields and the increasing volatility, I think we can expect to see more market shudders over the next few weeks. And frankly, I see no reason why this will dissipate. I think this is going to be the new normal for some time, which makes it very hard to make good calls on the market. So that's why I still maintain my position of being as liquid as I can and taking opportunity where there is opportunity to trade, but frankly not position in the long term, because frankly the long-term outlook, whether it's deflationary or inflationary, is just too vague at the moment. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.